Hi, everyone. This is Peter Krauth. I am the editor of Silver Stock Investor Newsletter and author of The Great Silver Bull. So thanks for taking part in this Metals Investor Forum Silver webinar today. We have a great lineup of speakers, including Chen, David Morgan, and Tavi Costa. And our presenting companies are Abra Silver, Aveno Silver, Silver 47, and SilverCrest. Well, it's certainly been an exciting past 3 months in the silver market, and I think there is a lot more to come. For my part, I'm going to cover the silver market and highlight the opportunities I see ahead. That will be followed by a presentation from Abra Silver. Please submit any questions that you have in the chat window, and as we'll have a Q&A session that with each company following their presentations. And so now I will start with my very own presentation. I'm going to tell you all about why I think that we are witnessing a breakout in the silver market. Global silver demand is about 20% up over the last 5 years. The prior 5 to 6 years saw an average of about 1 billion ounces of demand per year. And other than the outlier of 2022, we've seen a steady increase in silver demand every year. And so we're now at about 1.2 billion ounces of silver demand every year, whereas supply is certainly falling short on many fronts. We have not only seen silver supply stay stagnant over the last several years, but mine supply is down about 10%. When we peaked in 2016 at about 900 million ounces, we're now at about 800 million ounces a year. If you add in recycling, we're at about 1 billion ounces in total. Here's a chart or a slide that I like to keep up to date and point out that forecasts tend to be, I'm going to say, too conservative, maybe not quite aggressive enough. And this is on all fronts, in fact, both on the supply and on the demand side of things. So in 2023, supply was forecast to grow at 2%. It was actually revised down by 1% by the Silver Institute. They expected that industrial demand would be up 5%. It actually was up 14%. Solar demand, which is really something that we need to follow very closely when it comes to silver, was expected to be up 28%. That was revised up by 64% last year. And then the supply deficit was expected to be 142 million ounces. It turned out to be 184 million ounces. So the Silver Institute tells us that we are in a structural deficit environment. The last 3 years have seen a deficit. They're expecting a sizable deficit again this year. If you add up the last, or including this year, if you add up these 4 years of deficit, we're looking at about 750 million ounces. That's 3/4 of a year's supply between mining and recycling. So really things are starting to look quite tight for this market. And here's an interesting quote from Daniel Galley, who is senior commodity strategist at TD Securities. He told BNN Bloomberg recently that he thinks silver is probably the most exciting trade in the energy transition theme within the commodities complex today. So that's really saying a lot from someone who looks at all commodities and looks for opportunities across the board. A couple of interesting reports actually from or notes from Bloomberg. This dates back to May 29th, reported by Business Insider. They said that last Wednesday, China's silver imports hit a 3-year high of 390 tons in December and then hit 340 tons in April. And this is well above the monthly 5-year average of 310 tons. And that China's demand for silver is so strong that domestic prices of the precious metal are higher than international prices. And that's likely to lead to more imports to the East Asian nation in the coming weeks. Well, here's a chart that's very, very poignant and shows us with the brown or gold colored line the silver price paid in Shanghai over the white line that is the silver price paid at the LBMA. And we're looking at in some cases up to $4 and $4.50 above the LBMA spot prices. So that tells us that in China, they're willing to pay more than 10% above spot for silver because they're just so anxious and desperate to get their hands on it. And again, I think that a lot of that has to do with the silver market being so important for the solar panel industry. Solar growth globally is expected to jump 32% this year. If you look here at the 2022 to 2023 range, there was a huge jump. I talked about that earlier. And we see, actually, this is from Bloomberg NEF projections. They see capacity for solar modules just continuously growing over the next 10 years or so. And so silver being absolutely required for solar panels means that it's totally indispensable. There are technologies that are being looked at, but silver continues to be absolutely indispensable to solar. Now we look at solar cell technology and what is happening there. Well, the previously most important technology was PERC. That's expected to, the growth of new production is expected to be somewhere down to zero this year. TOPCon, which takes about 50% more silver but produces higher energy output, is expected to represent about 78% of production capacity. HJT requires about 18%, will represent about 18% of production capacity this year. That takes up to 150% more silver per panel. And here's a chart that is from Rystad Energy. It shows us the growth of what we call N-type technology. And that was almost zero back in 2021. These two technologies, TOPCon and HJT, are looking to represent as much as 78% of manufacturing capacity by the end of next year. Silver demand from global solar installs. 2023 was less than 150 million ounces of silver demand. That jumped to over 200. That's expected to jump to over 200 million ounces this year. And then by 2030, it's forecast that, again, by Bloomberg NEF, that's going to represent a third of all of the current silver supply will go to solar alone just in the next 6 years. So again, silver indispensable to solar, and the demand for it just continuing to rise very, very aggressively. So what's been happening? What's been driving the silver price recently? Well, it looks like what has been happening is that industrial consumers, and again, especially for solar, have been able to tap secondary supplies, secondary inventories, mostly through the futures markets. We have the Shanghai, the LBMA, and the COMEX, and we've seen that their inventories are down about 40% over the last 3 years. If you look at silver ETFs globally, we have a similar phenomenon, about 40% down. And so I think that the rally that we've seen in the last 2 to 3 months in the silver price, up about 45%, really reflects the market coming to terms with the realization that these secondary inventories that don't need to be mined, that are sitting above ground, have a limited capacity. We're down probably somewhere around close to, I would say somewhere close to about 1 billion ounces overall. If you look at the last 3 years, by different measures, we maybe have another 12 to 24 months of drawdown potential in these inventories. I think the market is coming to realization of that, and that's really starting to push up the silver prices, and that's what I think reflects the premiums that we see in China again in the last few months. Something that needs to be addressed too when it comes to silver is the effects of AI, which really are widespread and not just in all of the standard things that we see. But here's an interesting comment from Sprott recently that says AI is likely to increase demand for silver with end uses, including transportation, nanotechnology, biotechnology, healthcare, consumer wearables, computing, and energy storage in data centers. And if you look at data centers specifically, especially because of AI, in 2022, data centers represented a 1.2% consumption of global electricity. Because of AI, they're expected to quadruple their demand for energy. They could represent as much as 4.1% of global electricity. And here's an interesting tidbit. A chat GPT query takes 25% more electricity than a Google search requires, and that's by the Brussels Times. So needless to say, we've seen a clear breakout in the silver price. There was a sideways consolidation over the last sort of 4 years, roughly between about $22 and $28. It tested the $28 to $30 level 3 times in the last 4 years, and then we finally had this recent breakout. We're still hovering now. We've been to 32, hovering around 30. And I think we're going to see a consolidation over the next few weeks and months, probably somewhere around the mid 20s to $30 range, and then probably a new continued highs gradually after that return to rally mode. I think that we are quite early still in this silver bull market. Here's an interesting chart from a friend and excellent technical analyst, Jordan Royburn, who puts out the daily gold. He looks at previous silver bull markets and points out that it's hard to tell from this chart, but there's a black line, that squiggly line here, and it actually ends right where I have this note where we are here. So that means that this is as far along as we are in the last few months in terms of a silver bull compared to previous bull markets. So if you look at an average of the last 4 or 5 bulls, we would probably be somewhere around the $70 to $80 range in this cycle before it's over, just based on previous bull markets in silver. Now, this has dialed back, admittedly, a little bit in the last sort of week or two, but we've had recently a clear breakout of silver juniors when they've started to outperform gold juniors. That's a really big sign that silver is doing well. We've seen that the gold-silver ratio has also dropped quite clearly below 80. We've been down to below 75. Even recently, we're back above and right around 77. But when you get that kind of action, a drop below 80 and then progress on the downside, that means typically silver is outperforming gold. Gold tends to do well, but silver tends to do even better. And these typically lead to overcorrection. So you tend to get an overcorrection in the ratio. Probably we're going to see in this cycle somewhere closer to maybe 50 or 55 on the downside, which is below the average of the last several years, and certainly could see silver help silver rocket a lot higher from here. One last note, silver producers and developers, they continue to be, despite the rallies of the last few months, near valuation lows. The blue line is silver producers on an enterprise value per ounce basis. The gray line is silver developers on an enterprise value per ounce basis. Lots of opportunity still lies ahead. And I think that this is a great time for investors to really, start doing some research. If you're looking for guidance, I write the only silver-focused investment newsletter. I look at everything from physical silver and ETFs all the way to large producers and royalties and streamers, all the way down to junior explorers. It's a bi-monthly letter that talks about some proprietary research that I do, full analysis of new recommendations, and then you get updates every 2 weeks. You can follow my work at silverstockinvestor.com. I'm on Twitter at Peter_Krauth and on LinkedIn. And a final note, I recently launched a new service called Silver Premium. This helps gain access to financings, which of course many times include warrants and the leverage that that brings. This is meant for accredited investors. It includes a subscription to Silver Stock Investor, and I'm offering a 33% discount on that right now. So you can use the link at the bottom of this page. If you need to know more or need to get the link, just reach out to me. I'll be happy to provide that. So next, we move on to our first presenting company, and that is Abra Silver. We have John Miniotis, who is CEO of Abra Silver, and I'm sure he will be glad to walk you through all of the very interesting developments that we've had at Abra over the last several months, many milestones, and I leave the floor to John right now.
Excellent. Thanks very much, Peter. Very, very insightful presentation there. Thanks for everyone for joining this webinar. Yeah, as Peter just mentioned, I last presented at the MIF conference back in March in Toronto, which was only 3 months ago, so quite a short period of time. But since then, we've announced several very, very important milestones. So happy to walk you through those milestones, which have really helped transform the company and discuss our path forward here. So just as a quick recap, Diablilos is the name of our key project. This is a large-scale primary silver project situated in the Salta province of Argentina. And so myself and the current management team, we've been running the company since early 2020. So for about 4.5 years now. Over that period of time, we've conducted 3 very successful exploration campaigns. And as a result, we've managed to double the amount of measured and indicated resources in the ground here at a very, very cost-efficient basis. And so we're now sitting with a large-scale project, measured and indicated resource base of over 250 million ounces of silver, silver equivalent, and that's entirely silver and gold, so 100% precious metals focused. And one of the key milestones that we announced in late March was the pre-feasibility study. So on the back of the last exploration campaign, we put together a pre-feasibility study which showed that this project already has very robust economics. And this assumes quite conservative commodity price assumptions compared to what we have today. So assuming base case of $23.50 silver, $18.50 gold, this project, based only on the reserves, has close to $700 million Canadian net present value, just under a 30% after-tax rate of return, in a very, very quick payback period. So it's a large-scale project with very, very good margins. But what's really exciting is that in April, we also announced a $20 million Canadian strategic private placement, bringing in Kinross and Central Puerto, which is Argentina's largest utility company, as shareholders. So that really resulted in us significantly enhancing our cash position. We're now fully funded with over $24 million in cash. And as a result, we also have very, very strong strategic ownership in our company. Now, our project's located in the Salta province of Argentina, as many of you know. Infrastructure plays a very, very key role in terms of mining projects. And we're very pleased to be surrounded with nothing but mining in this part of Salta. And so this project's really ideally located from the city center of Salta, which has a large population, over 700,000 people live there, international airports, etc. You can fly into Salta, and within a 5-hour drive, you're at site. So excellent infrastructure in the region. And so Salta has always been seen as a very mining-friendly province. In fact, in the latest Fraser Institute, once again, it was ranked as the #1 most attractive jurisdiction in all of Latin America. And in fact, all top 3 jurisdictions in Latin America came from Argentina. And so Argentina is also turning a corner at the right time here. And so as we're advancing Diablilos, it's great to see sort of the stars aligning for us here. This is what the project looks like at site. So we get very little precipitation here. It's a dry desert-like environment. And as a result, you drill year-round. And so we're actively drilling right now. Of course, it's in the middle of winter in Argentina right now, but we're actively drilling with 3 drill rigs at site. It's a quick summary of the pre-fees figures. Once again, based on very conservative commodity price assumptions, this is already looking like it's going to be a large-scale project, producing almost 18 million ounces a year on a silver equivalent basis. So that would comfortably rank within the top 10 largest primary silver mines in the world. And importantly, this would have very, very low cash costs. So over the entire life of mine, this will be producing with all-in sustaining cash costs less than $12.50 an ounce. And over the first 5 years, it's actually less than $10 an ounce. So exceptional margins at current commodity prices. Now, just quickly, this is what the production profile looks like in the current mine plan. And what you can clearly see is between years 1 through 5, we have exceptionally high grades. And so that's a result. Last year, we discovered this high-grade extension of the main ore body. This is called the Jack Zone, where you have much higher grades than the overall deposit. And so this new Jack Zone has grades north of 200 grams per ton of silver. Again, this is located close to surface, open pitable in oxides with good metallurgy, etc. So very cheap to mine, to process. And with those grades, you get exceptional free cash flow, which really helps, of course, with the economics of this project. And so a very, very strong production profile, especially in the first 5 years. And now with our current exploration campaign, one of the key goals is to extend the high grade zones for another 5 years or so. And so we think there's significant opportunity here for us through the drill bit to maintain elevated high grade profile here until about year 10 or so. And so that's one of the primary goals. Right now, we're drilling several deposits around the main Jack and Oculto zones, and results will be expected out within the next month or so. And then we'll be getting results here from our exploration campaign on a very regular basis for the remainder of this year. Now, once again, when you look at the team's track record, led by David O'Connor, who's our chief geologist, he lives down in Salta. He's had a great track record of finding ounces here on a very, very cost-efficient basis. This is the most aggressive exploration campaign now that we've ever embarked on, and I'll show you why. And so really the current resource is based on Oculto and Jack. Jack was the new high-grade discovery we made last year, but you can see we have a very, very extensive land package. And so all of the drilling historically is focused really on only a small portion of our property. That's where we've defined already north of 250 million ounces of silver equivalent at Oculto and Jack. And so right now we're drilling, of course, around Oculto and Jack, looking for those high-grade extensions of the mineralization. But for the first time ever, we're also testing some of the regional targets that we have on our land property. And so now with the benefit of having a strong balance sheet, with silver prices and gold prices obviously starting to move higher here, we think it's perfect timing for us to be drilling, looking for these brand new targets that we have on our land package. And so we have this big porphyry complex situated about 4 kilometers away from the existing deposit. We'll be drilling that very, very shortly. And then through geophysics, we identified this other big anomaly that has never been tested. In fact, we're drilling this right now, the Jasperoid target. And this is a brand new target, again, where we've never had any drilling historically. And you can see by the magnetic anomaly here, this extends for about 3 kilometers strike extent. So we already have, from a risk-reward standpoint, we already have a large, robust project. We think we're very confident that will improve with additional drilling in and around Oculto and Jack. But yeah, what really excites us is the potential for some of these larger regional discoveries on our property here. This again just helps visualize. This is what the project will look like after Oculto and Jack have been mined out. Right now, we're targeting extending that high-grade Jack mineralization out towards this Alpaca target, and then potentially connecting this historical Phantasma resource, which was not part of the pre-feasibility study. We'll be drilling Phantasma to define that a bit more, and likely even extending that to Oculto or towards Oculto. And so there's significant exploration upside in and around Oculto and Jack. And as I mentioned, we're drilling that right now, fully funded for the existing exploration campaign. And so lots of news flow coming out here, starting very, very shortly. Now, from a valuation perspective, as Peter just mentioned, this really still is ideal timing. I mean, most silver explorers like ourselves are still trading at near bottom sort of valuation levels. And so when you look at the pre-feasibility study, assuming very conservative long-term commodity price assumptions, we're trading at less than 0.5 times on a price to NAV basis. Now, if you apply just current spot prices or close to spot prices, the net present value of this project is about $11 per share Canadian, and we're trading at less than $2.50 today. So we're trading still at pennies on the dollar. Obviously, we feel as we continue to have exploration success here, and as silver and gold prices move higher, the valuation gaps here throughout the entire sector will start to catch up to the underlying value. Just very, very quickly, that's Diablilos in a nutshell. We also have another project in Argentina. This is in the San Juan province. This is called La Cuepita, and here we've partnered with Teck. So this was another important announcement we made back in January of this year. We brought in Teck as a partner. They can earn up to 80% interest in this project by spending $20 million in drilling, making $3 million of payments to us, and making all the existing property payments to the original vendors. So nothing but upside again for Abra shareholders. Very, very excited to be partnered with Teck, which is obviously a world-class operator and explorer. So I think I'm out of time. Lots more, obviously. If anyone has any questions, please feel free to ask now in the Q&A. And then separately after this conference, happy to take any questions as well.
Well, thanks very much for that, John. Great overview of Abra. Obviously, great to have twice as much time, but nice job of giving us an overview. I want to remind everyone, please, if you have questions, submit them in the Q&A box. We will be glad to try and take your questions. In the meantime, I have a couple of things I'd like to maybe chat about with you. The first one is there's obviously been an election that is looks like it's quite impactful in terms of Argentina and maybe well beyond, with President Milei, who was elected a few months back. Can you tell us what the impact can be for mining in Argentina, mining for your province, and for your project specifically with Milei in charge now?
Yeah, absolutely. It could really be a game changer for the country as a whole. And so President Milei has come in December, and so he's been in power for about 6 months, but he's already made tremendous progress. And so his whole platform is welcoming foreign direct investment. And so he's proposed this large reform package for large-scale investments. So any investments in the country beyond $200 million, which this certainly qualifies as, would get sort of favorable tax treatment. And so the corporate tax rate will go from 35% down to 25%, would eliminate export duties, would eliminate mining royalties starting from year 3 onwards, and would accelerate depreciation benefits, a whole host of benefits really to incentivize sort of foreign companies from coming in, investing in the country. And he really sees that as the path forward for Argentina to fix their economic situation there. And so very welcoming, of course, by all mining companies, oil and gas companies, agriculture, et cetera. And so, yeah, the impact for our project, it would be hundreds of millions of dollars of benefit under the new proposed tax regime. And so our pre-feasibility study just assumed the existing regime. We did not, forecast any of the existing measures being implemented. But recently he's proposed that reform package. It's been approved now by the House of Representatives, and now is in the hands of the Senate. And so if the Senate approves it, then President Milei can then sign it into legislation, and it would take effect. So he's making excellent progress. We're obviously very cautiously optimistic and monitoring things closely. But for the time being, again, not including that in our valuation. So that would be a huge positive benefit if and when those changes are enacted.
Excellent. I'm curious about Central Puerto. I realize that they invested, so did Kinross, but Central Puerto being a utility, what's the investment case from their perspective in Abra Silver?
Sure. So this is the first time they've actually directly invested in a mining company. And so, yeah, we're very pleased to have them as a partner. Really, I mean, they came to site when we were doing the pre-feasibility study. We assumed that we would build a large 20 megawatt solar plant as part of the CapEx. And that costs about $40 million and is included in the CapEx. So it's a large component of our capital costs. Central Puerto, of course, being the largest power supplier in Argentina, is currently building solar plants in Salta, in Catamarca, in all of northern Argentina, really. And so, yeah, they see this as a very strategic investment for them. As Diablillos enters into construction, of course, we're going to need quite a lot of power. And so for us, again, that could be a big benefit, where Central Puerto could eventually build the power plant that could reduce the capex that we had sort of in our study. And then, of course, we could lease the power from them directly. And so it's great having them in as a strategic partner. They're in this for the long term. They're very bullish on Argentina. They see, the mining sector as really being a major need for additional power, and are obviously positioning themselves as well. So we're extremely happy to have them and Kinross, of course, as large strategic partners.
Excellent. Here's one. I'm wondering what, if you look at Diablillos as it is now, what is sort of the average silver equivalent overall?
The grade?
Yes, exactly.
So
Sorry.
yeah, in the first 5 years, it's about 210 grams per ton on a silver equivalent basis. And so
Okay.
if you use a 70-to-1 silver to gold ratio, let's say, that's about 3 grams per ton of gold in oxides, near surface, open pitable. And so, yeah, it's extremely, extremely high grade. That's for the first 5 years. That's really because of that high grade jack zone. And then beyond that, it's closer to maybe 160 grams per ton. So still, overall, it's just under 2 grams per ton on a gold equivalent standpoint. And
Okay.
so, very, very high grade near surface, and that's only in oxides.
Excellent. Well, very compelling project, compelling company. We've used up our time, unfortunately. I'm going to pass the floor now on to Chen Lin of Chen's Picks. I'm going to let Chen give his presentation, and he'll be following up with Avino Silver afterwards. Thanks very much, John, and Chen. The floor is yours.
Hello, this is Chen. Thank you for dialing in. It's a very exciting time. Very exciting time. I think we are one of a few times in history, and we're gonna witness history. So my point is a Silver 3.0. Okay, so we have 50. We hit 50 twice, and my prediction still the same. I'm a little bit more aggressive than Peter. I think we could hit 50 this month. Okay, it's only a few weeks from now. So we'll see. I'll show you why. Let's get started. Let me move. Okay, this is a disclaimer. So this is me. I'm like Peter. I manage my family assets. So I'm not really particular gold bug or silver bug. I monitor all the sectors. Okay, and I buy gold. I exit gold when there's I think it's fair valued or could risk to come down, and also invest in other sector like biotech, like energy. Last year I hit #1 in US. I already have a 5-bagger. Actually today down a little bit, maybe 4-bagger, 4 or 5-bagger already won. First 5 months, pretty good. And I believe I probably have a few 10-bagger this year. So let's go down. This is my #1 last year, and it's always you need to look forward, right? So that was 1.5 years ago. I saw the incredible rise of the solar panel. So that's what I call the silver, the new lithium. And about half a year ago, I saw the sharp rise of Chinese buying gold. I call gold, and gold took off a few months later. So what happened with commodity? Everybody's asking me. on over last weekend, OPEC Plus has meeting, and then they decide to increase the production. Okay, so that's actually crash really going down on Monday and Tuesday. New York Stock Exchange, completely unrelated. Okay, they have a crash. Barrick Gold suddenly dropped 99%. Berkshire, Warren Buffett's company, suddenly dropped 90%. So they gave a lot of people, touch people's nerve. The investor, the fund manager, they have a risk manager start tapping on their shoulders, like pull back. So we have a huge pullback on Wednesday. Okay, this flash crash. I was in the city having meeting all day long, and I look at wow, silver down below 30. So it's what happened. Actually, I went back and took a look. What went down the most? Actually, those are small market metal, platinum down the most. Actually, I sold all my platinum, which is good. And silver down big. Gold, actually, copper didn't move down much. That they have a very deep market. Okay, so not because some fund want to liquidate, they cannot really hit them really hard. So that seems like it's just liquidation of certain fund and this margin call. So that's why I put out newsletter on Wednesday. I think this is a great buying opportunity. Okay, after I come back. Okay, yesterday. I'm sorry. So there will be. I was talking about today's the ECB cut. We had the cut yesterday. Canada had a great cut, and then we have a job number tomorrow. I believe it's time to buy before the job number. Watch for the job number 4% unemployment rate. Once they hit 4%, the Fed has to cut because they're due mandate. I'll discuss later. Okay, so let's look at the short-term silver chart. Okay, it's just a beauty. You can see they have a breakout here, you have a breakout here, and then we just a consolidation. I put it this morning, but now it's a little bit more towards the top end of the range. If this breakout, technically, okay, it will go at least to 35, 36 range. And then as we know, 35, above 35, there's very, very little resistance. Okay, so it could go parabolic. That's why I think it's possible. That's another one, longer term. We already have a clear breakout, just like Peter said in his excellent speech. And then look what happened. What happened the last time? What happened last time? The breakout is very sharp. Silver tend to go up very, very fast. So that's why I call investor just to get in silver. And then I see still likely to hit 50 this month. If not, maybe the month after. But if you just hold back, you could miss one of the greatest rally in your lifetime, okay, of silver. So, and then you don't want to chase silver when it's 50. You want to get in now. Let me show you the other chart. You see the one before in the 1980s, even sharper. Okay, of course, it spike up and down, spike up and down. The silver rally, the rising edge is very sharp. So that's what I'm trying to tell you here. And remember that. And then you want to be front of the, get on the train, not like chasing the train when it's over 50. I believe this time will be over 50, and then we could go to 100, but eventually long-term silver price supports $30 to $50. Let me show you. Okay, so the Fed will cut. Look at the job opening, right? This one actually Janet Yellen used to see, okay, when she was running the Fed. And it's very close to pre-COVID, right? Let's look at the other. This is even worse, the hiring and quit. Those chart actually is already worsened than before the COVID. This is a big COVID spike. And then right now, the green line is hiring already lower. It's already lower than the pre-COVID. So that's what I believe the cut is coming. So I don't have too much time. I just show you there was a squeeze of copper a few weeks ago. Look at what happened. Heavily shorted. Boom, we squeezed. Copper was over $5. I just went to 520 on that squeeze. So I see potentially silver squeeze coming. It's a very similar pattern. Heavily shorted. Boom, we could have a squeeze. No guarantee, but I think it's coming. Okay, so I was talking about AI boom. At last Metal Investment Forum, I talked about the quickest way actually fix to get power for United States actually is the ban the Bitcoin mining. Okay, but China already banned it, but I don't know whether we have a political will or not. The second fastest way is photovoltaic because it needs very little permit. There was someone on Bloomberg talking about nuclear, but nuclear takes 10 years to permit, right? Photovoltaic can get it done within 6 months. I mean, you can get, in the clean the ground, within 6 to 12 months. So that's what happened. The AI leader is Microsoft. Microsoft announced a few weeks ago they will put $10 billion into the solar. What happened to First Solar? Look what's happened. Actually, First Solar market cap increased by 10 billion. So it's not one day event. Okay, it's multiple day event. So basically, there's billions of dollars piling into the solar stock. That's a real thing. It's just happened right now. You can take a look at First Solar stock, but you must haven't realized that the solar actually needs silver. So they haven't connect this solar to silver yet. When they connect, silver will explode. I hope they will connect this month, then we see $50, maybe more. So what is China buying? Okay, this is a premium. I think Peter already mentioned that. I just quantify this. The China's premium is going up and up. Okay, this is a China's silver stockpile going down. The way it goes, it will be zero before the end of the year. And then this is China buying gold. I talk about gold 6 months ago. You see the gold, and then gold buying cool down a little bit, and silver just got started. Okay, so and then this is a example. I don't have time, but you see China actually Chinese people was buying silver most. Actually buy a little bit gold and actually selling some copper. That was their recent trade. And I just want to go solar become number one because Silver Institute have been consistently underestimated. So demand from photovoltaic. I already hammered them for a couple of years. Last year, they said 64 from 28%. And then this year, they're wrong again. I had a big argument with them at their presentation a few weeks ago. And then they have a solar panel increase by 30%. They have 29%, which is perfect. But all the line item, they just ignore the fact this is going to grow by 20%. Actually, I see it 56%. What they have is inconceivable. Okay, they just put out a number. I think they lied. Okay, I mean, I don't want to use that strong word, but I asked them to provide me a spreadsheet to support their 20%. They couldn't. So this is a silver long-term chart and breaking out the huge money on the sideline, commodity super cycle. This one I want to make, it's a new mega, make a silver mining profitable again, right? Before silver really about spike or about speculation, very hard for me actually value investor to value silver stock because all about emotion and then people like who had the biggest voice. Okay, now it's really about profitability. You can make a lot of money mining silver again. And this is what I see. $50 silver this month, and then you can go to the chenpix.com to get more information. Let's get started. I have a wonderful silver company called Aveno Silver. Make me and my subscriber very happy. So without further ado, let David Wolfin to talk about Aveno story.
Thanks, Chen. Aveno was incorporated in 1968, so we're in our 56th year of being in business, over 40 years of production. So all the infrastructure is there. You can see in the picture there's a village in the background there, so people can literally walk to work. We have a clear path to transformational growth. So we own several assets that we're going to be developing and bringing online over the next 5 years. So Aveno's primary asset is the Avino mine in the state of Durango, Mexico. It's on the Sierra Madre Silver Belt, surrounded by mines and infrastructure. It's a safe jurisdiction. It's in agricultural farmland, so you're not in some remote area. We don't produce silver bars. We produce a concentrate, which gets sold to Samsung, goes into their electronics. So the project portfolio is made up of 3 assets. The producing Avino mine produced 2.4 million ounces of silver equivalent last year. We're on pace to do between 2.5 to 2.8 million this year. The other portfolio asset is La Preciosa. We acquired from Coeur Mining a couple of years ago, and we're just in the permitting process We're expecting the permits anytime now, so we're excited about that. And the oxide tailings project, our past production, we did a pre-feasibility study and came out with those results this year. So it's a favorable net present value, which you'll see coming up. We got a large endowment of silver equivalent, huge, 371 million ounces of silver equivalent, 43-101 compliant. 60% of that is pure silver. These are the catalysts for our growth over the next 5 years. Here's our production. So this year, about 2.5 million ounces. You can see the dark blue, it represents the current operating Avino mine. And then La Preciosa is going to start contributing, and then the oxide tailings. So you're looking at between a triple or quadruple of production in the next 5 years. We want to get between 8 and 10 million ounces. Current market cap is close to 200 million. And if you look at Endeavour Silver, they produced about 8 million ounces of silver equivalent last year, and they got a $1.3 billion market cap. So that's what the value is today. Here you can see our production by metal, so transitioning to primary silver as we grow. But this year it's 46% silver, 20% gold, and 34% copper. Recent milestones, we completed the acquisition of La Preciosa in March 2022. In order to get the permits, you need the blessing of the local people and the municipality there. They're called ejidos. We got that this year, and we immediately filed with the environmental department to get our permit. And we're just doing a archaeological study, which was previously done by Corp Mining, but they wanted it updated. So that's being done next week, and it'll be filed shortly thereafter. So we're expecting the permits in the next few months, and then we can break ground. La Preciosa, we're planning, if all goes well, we can start the decline. Once we get the permits, we've got all the equipment, and it's only 350 meters to get in to start hitting high grade material, which we're going to process at the Avino mill. Then we came out with an oxide tailings pre-feasibility study. There's a slide on that coming up. We completed 7,500 meters of drilling last year on the Avino property below the underground workings of the mine. And we hit the best intercept in company history. This was 100 meters below the developed area of the mine. We hit 57 meters of 296 grams of silver equivalent. Of that, there was 37 meters of over 400 grams of silver equivalent. In that, there was 3.4 meters of almost 3 kilograms of silver. So the mine keeps getting richer as we go deeper. We're an ESR-focused company. We care about the environment in which we operate in, and we received a special designation for the second year in a row. And one of the key things that we built was a $10 million dry stack tailing storage facility. So we getting away from traditional tailing storage, and now we're currently backfilling the open pit with dry tails. Here you can see La Preciosa, 19 kilometers away from Avino, in rolling farmland, safe jurisdiction, paved road, door to door, plenty of water. We've got a well in between. We've got a dam with millions of cubic meters of water, and in the underground there's water. So we've got that. We've got a 20-kilometer dedicated power line capable of 5 megawatts. We're only utilizing 3. So excess capacity for when we will go to build the oxide tailings plant. 100% Mexican labor force. The mine goes back hundreds of years. So villages grew up around the area. So we're fortunate that we have skilled labor in the vicinity. La Preciosa had 1,500 drill holes on it, 90 million spent. We paid 30 million to buy it from Corp. And when they bought Orco Minerals in 2013, they paid 350 million to buy this project. So we paid 10 cents on the dollar. It's been pin cushioned. All of it's in red, between 150 and 500 grams of silver. So it's all ore grade material. 17.4 million metric tons of M&I, another 4.4 million inferred, makes up the 130 million ounces of silver equivalent. but there's high grade intercepts in there above 500 grams running in the kilograms. So we're really excited about bringing this project online. We're going to put in a single decline, 4 meter by 4 meter. Rubber tire trucks could go in there. We're going to access all three La Gloria, Abundancia, and Martha veins from one portal. So low environmental footprint, which is what the locals liked. When we got the agreement from the Hitos, we immediately sent equipment over to get the above ground stockpile. This was done in the 80s by Lewisman. Lewisman was run by Eduardo Luna, a big giant Mexican conglomerate that was broken up into Wheaton River and a bunch of other companies that are around today. So we went and hauled this over to our mill, and we're processing it through our plant right now. Here's the oxide PFS on the oxide tailings. I'm running out of time, but this came out in Q1, 61 million post-tax MPV. If you look at the current prices, I mean, the prices they used was 23.45 US silver over here to the right and 18.39. Current prices, the post-tax NPV would be up 75% above this. So it's a great leverage. The cash cost per ounce is projected below $10, all in sustaining $10.23. We'll produce 9 million ounces of silver, pure silver, over the life of the oxide tailings project, and 76,000 ounces of gold. 121 employees directly. We have 450 now. With La Preciosa, we'll have about 650 employees in the next 5 years. We'll pay about 50 million in taxes and 140 million in direct contributions to the local region. Here's our global resource. So 53 million metric tons of M&I, 277 million ounces of silver equivalent. You see the pure silver is 170 million, 800,000 ounces of gold, and 300 million pounds of copper. And then inferred another 23.7 million metric tons. So combining that is 70 million metric tons. We process between 700 and 750,000 tons on an annual basis. So it's over 80 years of mine life. And that's what makes up the 371 million ounces of silver equivalent. Financials, Q1, our revenue was 12.4 million, net income 0.6 million. So we're generating positive cash flow. This doesn't take into effect the rally, really. So Q2 is going to look even better. But we improved. We lowered our AISC down to 2023. So at 2.5 million ounces of silver equivalent production on an annual basis, you're looking at $10 in profit. So the future looks bright for Avino. 5 million in working capital increased. Our cash flow is going, our cash balance is growing right now. It's over 5 million, a working capital of 10 million. I'm just running out of time here. So outlook for the year, 2.5 to 2.8 million ounces this year, 700 to 750,000 ounces of production through the mill. Capital budget is 7.3 million to 9. 3 to 4 of that is to put in the decline on La Preciosa. Research. So here's the market cap, 136 million US, 185 Canadian. I'm currently the largest shareholder, so a lot of skin in the game. And we're getting index inclusion now. Titles picked up about 3 million. And as the market cap grows, we expect more index inclusion. So I'm going to ran out of time now. So I'll turn it back over to Chen, but you can see we've there's great potential for the future growth of Avino. Chen?
Okay, great. Thank you, David. Excellent presentation. We already have a question pouring in. If you have additional question, feel free to type it in the Q&A box. Okay, first, I mean, in general, there's a question about the Mexican politics, and people, we just have an election. The lady got elected. Can you tell us a little bit, and then what's the impact to the mining in Mexico?
Well, yeah, I mean, people are expecting that she's not going to be as negative towards mining. She's got a PhD in science, so she's going to follow the science. And the economy there, it needs help. So foreign investment. So I think that she is going to really be pro foreign investment. So that's what we're thinking. But for the first year or so, she'll probably toe the line, but she'll want to make a name for herself. And we don't think that it's going to be bad for mining.
All right, good. Sounds good. Because there are people confused. There are even some people say Corp, they sell everything in Mexico. I don't. I think it's a good buying opportunity, but we will see. But what I understand is
we're grandfathered. So
exactly, you're a grandfather. Just if you're producing, you have very little impact. If you are exploring, maybe maybe there's some issues, but your grandfather, as you said, and then all these producing mine. And then they're creating tax revenue, creating jobs that it's not impacted. Am I correct?
Say that again. Sorry.
I say existing mine
a chat
who are paying tax and hiring local people will not be impacted.
Pro mining, pro jobs. So we have the support of the local municipalities, the state government. And you're in an area where we're the highest paid employer. So everything favors it continuing.
Yeah, I've been to your project. I saw the face of the local people. They're very happy seeing you. That's great. So going down to the next for the permit, I think people are asking about how that I have. You said you have something going to file next week. So what do you need to do to get the permit, which is very important for your company?
Well, there was just some legacy things from when Corp had it. So we're just cleaning that up. And that was the finalizing the archaeological study. So it's agricultural. There's no concern there. So that's being submitted next week. But that's the final thing. We've been collaborating back and forth since we made our submission to put in the decline, and there's been no pushback. So we're excited.
Okay, so how soon will you hear from the government? So you submit it next week, and they have a 30-day, 60-day, whatever to respond, or
when we made the submission originally, they had 90 days to reply, but they already did, and we've been back and forth. So there's that, and then there's the explosive permit. So it's probably another 2 to 3 months.
2 to 3 months. Okay, great. So you could be the company get a permit and actually send a statement to all the mining community. Mexico is still open for business, right?
Absolutely.
Okay, great. So there's another question from the user. How much leverage do you have? Do you, if silver price increase, like I predict, we go to 50, is your, basically, I think he's implying, are you hedging or can you benefit from the rising silver price?
Absolutely. There's no hedging. 371 million ounces of silver equivalent. That's over 3 ounces per share. So $100 in situ value. So you can do the math if it goes to 50 or beyond. And on a PNAV basis, we're below 0.5, and our peers are over 1. So you're going to see a re-rating in our stock when we get that permit and we start breaking ground, because people will see that we have a path forward.
Well, excellent. So I saw you have excellent Q1. That's among all these, I was talking to my subscriber. The Q1 could be a ugly Q1, but the Q2 will be beautiful. But you already have a beautiful Q1. So what kind of number can you give us some idea? What kind of phenomenal number you're going to get in Q2?
Well, we produced around 750,000 ounces per quarter, 650 to 750, depends on the grade and mine sequencing. If there's $10 margin in there, it's going to look pretty good.
Okay, excellent. So you already have $5 million on the balance sheet, right? Your working capital is 10 million. So seems like you are covered for this expansion, the decline.
Yeah. We're not planning to go out and raise a ton of money for the oxide tailings, because that's several years out. There's just we're going to do a feasibility study on that. So the primary number one thing on our minds is to bring La Preciosa online. We have the engineering team to do that. We have equipment. We have jumbos and scoop trams ready to go. So we will literally start the following day when we get the permit.
Okay, great. Thank you, David. Unfortunately, time's up, so we have to move on to the next company. The next is Silver 47. Actually, it's one of the Crescat favorite, and Tavi is going to present that later. So they're heavy investors in this and going to IPO very soon. Talking about timing, let's welcome the Silver 47.
Thanks, Chen. Well, welcome everyone, and thanks for taking a few minutes to listen to the Silver Summit. So Silver 47, my forward-looking statement, I may be making some forward-looking statements. So just a little bit on the company. So I founded this company in 2021. We raised about $5.5 million to date, and currently are in the process of raising $3 to $5 million to fund our 2024 exploration season and get through our listing. So the plan is to be trading before the end of this calendar year, 2024. And we're pretty excited to welcome Mr. Eric Sprott to the share registry. So between management and Eric Sprott and Crescat is 40% held. And so we're excited to move this company forward. Just a little analysis. So one way to measure value and compare ourselves to our peers is using our market cap divided by the ounces in the ground. So we have about 168.6 million silver equivalent ounces on our recently published inferred resource. So that gives us quite a low valuation compared to our peers, 22 cents Canadian per ounce in the ground, or 16 cents US per ounce in the ground. So I'm the founder and interim CEO of the company. Alex Wallace is our VP Exploration, and Kevin Chen is our CFO, and we have two independent directors, David Netherway and Ryan Goodman. So I won't talk too much on the silver demand. I think the guys covered it off fairly well, but as probably most people know, that primary silver deposits are rare, and a lot of the silver, in fact, about 70% of the global silver production comes from other mines like lead, zinc, copper, and gold mines. And I think the opportunity that we have is really fitting into that strategy. We have is to really rapidly grow our current resources, the Dry Creek and West Tundra Flat zones, and drill for new discoveries, and really a focus on the silver, copper, gold. And we want to fast track these resources into a decision towards mine development. The company actually owns 3 assets, wholly owns 3 district scale projects. The Michelle project in the Yukon. In 21-22, we made a pretty significant silver discovery, 15 meters of 900 grams silver, plus about 30% lead zinc. Unfortunately, that's been stuck in permitting delays for now. So we've moved on to acquire the Adams Plateau project in British Columbia. Had some historical drilling there, 4.8 meters of 340 grams silver, with some recent surface sampling of 4,000 grams per ton. So interesting that these 3 assets are similar in nature, VMS/SEDEX type deposits, and SEDEX and VMS can be quite large and quite rich. Our flagship project is called Red Mountain in Alaska, South Central Alaska. It is classified as a VMS/SEDEX deposit, and our focus this year is to advance that project. This is showing you just a comp scale of other world-class VMS camps. What's important to note here is that we know that VMS deposits form in clusters. If you look at some of these other well-known mining camps, like Noranda and others, these things are running 50 to 100-year operations. So once you get into these camps, you tend to have long life operations. And really, we're just getting started with our initial 15 million ton resource. We did come up with an exploration target here of 50 to 75 million tons. And giving the current grade range that we have at 300 to 400 gram per ton, that puts us in a 500 to 900 million ounce silver equivalent exploration target. And if you just pull out just the silver alone, it's like the silver and gold combined would actually be about 150 to 300 million ounces just on the precious metal component of the zones. So where it is located, South Central Alaska. We're, as a crow flies, directly about 100 kilometers from Fairbanks. It is a large land package, 620 square kilometers, about a 60-kilometer trend on an east-west. There is rail and road access over here to the west. There's a trail that gets us access in here, and there's a couple of airstrips that we'll be utilizing for this season. One actually unique thing about where we are here is it's on state managed lands. So there's no BLM or US Forest Service to deal with. And this land in between where we're looking to build these roads would actually be on state land as well. So we see a pretty clear path with the state of Alaska having a strong support for mine development. So again, a 60-kilometer district trend. It's really a unique situation. We've got numerous exploration targets on the VMS side. All these little balloons are exploration targets that have been identified, and you can see where the resource lies of these little red zones here, the Dry Creek and West Tundra Flats. So lots of upside potential. The western target area, which have not seen much work, are actually classified as more SEDEX, and we know that the horseshoe target now represents quite a thick mineralized horizon, up to 200 meters thick, that we're planning to perhaps test this year. And this is the reason we got excited about this opportunity for the silver potential. You can look at any one of these intervals up to 37 meters of about almost 700 grams silver equivalent. But these are particularly interesting, this 5-6 meters in that 2,000 gram silver equivalent range. So I think lots of exciting grades to generate. And that's really the plan this year, is to do some confirmation drilling, do some infill drilling, and do some step outs on some new discoveries. So a little bit closer into the two zones that have been, most of the drilling's been done. About 37,000 meters have been drilled on these two targets. They do form part of the same formation on a different limb. So there's potential, there's 2.7 kilometer space in between here, but there is potential to potentially connect those two target areas. But pretty significant gold credits as well as copper. And I think that's an important thing about these polymetallic deposits. And I would argue that polymetallic deposits are your friend. And given that, given the volatility in commodity prices in general, it helps to normalize your production profile when you're getting revenue from various metal streams. So yeah, here's the resource. I mean, it's combined open pit and underground. It is polymetallic. It is zinc forward. Of the 15.6 million tons, it's 1 million tons of zinc equivalent at about 7%, 168.6 million silver equivalent, using a 336 gram per ton silver equivalent grade. Or another way to look at this is that like 2 million ounces of gold at 4 grams. So pretty significant grade, I think. And we'll continue to like to improve on these numbers. And one of the things that we're excited about is when we acquired this asset in the late 2023, it actually had a 2022 JORC resource, and there's a significant amount of difference between the JORC and the 43-101, and it was largely due to drill spacing. So we lost about 100 million ounces of silver equivalent from that conversion to JORC to 43-101. The good thing for us is that we can actually claw that back through some infill drilling. So I think there's pretty rapid growth here in front of us. Here's just looking on the east side of the target areas, mostly the VMS targets. All these little circles represent the geophysical EM conductors, and these little blue and green dots are the zinc and lead anomalies. But what's interesting here is what we're seeing is these units have been folded up, kind of like the pages of a book, and we're seeing the edges, these anomalies that we're seeing at surface are really the edges of the pages if you fold up that book. And the syncline represents the spine of the book. So there's lots of opportunity to basically go down the limb on either ends of this target area. So pretty open for new discoveries. We're pretty excited about this Kiwi target over here out to the western part. It had some surface samples up to 16% copper and 316 grams per ton silver. So an exciting new target that we want to test this year. So and also the galleon target up here, this 1,265 gram per ton silver rock sample has never been drilled up here. So still pretty early days on the opportunity here. We've got a good baseline resource to start with, and we're going to rapidly grow this thing. So just in summary, we're pushing about 170 million ounces silver equivalent again, about 2 million ounces of gold equivalent at 4 grams. And we have a pretty aggressive exploration target in that 500 to 900 million silver equivalent ounce target. And so we know it's a discovery-rich, a district-scale polymetallic project with a new listing coming this fall. And so we think we're in good shape. And if you're interested in learning more, please reach out. There's my email, gthompson@silver47.ca. So thank you very much.
Thank you, Gary. Excellent presentation. There any question you can in the Q&A button, you can press the Q&A and ask a question. So far, we don't have any from audience. Let me ask, from my perspective, because I'm your shareholder, I'm happy to see Crescat is your shareholder and AbraSilver is your shareholder. That's just two well-known mining legends are in your stock. And then you plan to go list in the fall, right? In a few months. Is that correct?
That's correct. Yeah, we've got to get through, close up this financing, get through our audit, which is the end of July. And we want to get some exploration done this season, and we'll all culminate together towards the fall. And right now I'm hoping sort of October timeline to be trading.
Okay, excellent. So you say you finish up this financing. If audience, there are some, wealthy investor interested in participate, can they contact you and get into this financing?
Yes, for accredited investors, yeah, please reach out to gthompson@silver47.ca.
Okay, great. There's a question, how did the Silver 47 came out?
Well, 47, as you may know, is the atomic number for silver. So it was really a strategy around focusing on building some silver assets.
Okay, excellent. So let me try to get from the note. You have 167 on almost 170 million ounce silver equivalent right now. You said from Joe and to 4311 you lost 100 million ounce. Is that correct statement?
That's correct. Yeah.
So with a little bit small drilling, you can easily double the current resource. Is that a fair statement?
Yeah, that's what we've been told. Is if you look at the 3D model and where we lost those ounces on that conversion, it's really just a matter of drill density. There was just too much space between those holes, so it's just a matter of infilling. We're highly confident that we can claw those back with a reasonable budget.
Okay, good. I'm also very, very excited about the other metal, copper potential on the other side. Has they ever been explored? Has copper ever been explored on your property?
Well, there's some copper in the resource, and some of the drilling in the two targets that have had most of the drilling. And what's exciting, you're right, like the Kiwi target has some pretty significant copper mineralization that really hasn't been tested. So I think there's a lot more to come from this project, both on not only on the silver and gold side, but also on the copper side.
Excellent. And finally, this is Alaska. Is that my understanding? Is that a brownfield, right? It's relatively easy to get permit.
Yeah, I mean, given that we're on state-managed lands, it's an important distinction from BLM lands or U.S. Forest Service. So the state of Alaska is very pro-mining and very supportive. We're permitted for like 5,000 sites or something. Obviously, we've got some work to do to get this thing into PEA and a development decision, but that's the longer term goal for us, is to move this thing on a development curve.
Okay, great. Unfortunately, we're running out of time. For all the people asking about to get into financing, you can go to Gary G. Thompson at silver47.ca. That's correct. That's your email address.
Yes, thank you.
Okay, great. Thank you. Now I hand over to my good friend David Morgan for his presentation.
Thank you, everyone. Great presentation so far. Thank you to the Metals Investors Forum for the invitation. And it is yours truly, David Morgan of the Morgan Report. First is the disclaimer. I'll be making some forward-looking statements, and I'm an independent researcher, longtime investor. I am not a certified financial planner. So I only have a couple of slides here, and I want to emphasize a few things. One of them is this slide, obviously, and this was put out by Forbes magazine after Warren Buffett bought roughly 130 million ounces of silver off of the COMEX. That would probably never, in fact, the rules have been changed. You'll never be able to buy that amount of silver at one time off the COMEX. When Buffett bought the 130 million ounces of silver, he was only given 90 million ounces of silver, and the other 40 million ounces of silver were delivered over time. In the meantime, the silver lease rate went up to about 17%, remained there for quite some time. Buffett hates static investments. He wants to see something that has a yield on it. Well, a yield of 17% is quite a yield. Once he moved the silver that he had bought from the COMEX over to the LBMA, and all 130 million ounces showed up in the warehouses there, the SLV was started. The SLV started with, coincidentally, 130 million ounces of silver. So you can make the connection however you wish. I've drawn my own conclusions. So looking at this chart in front of us, this is an inflation-adjusted price of silver going back from 1344 till Buffett's purchase in roughly 1999, 98. And it shows to 2004 when, after the purchase, the silver price rocketed from under $5 to about $8, almost overnight, with the announcement that Buffett had bought so much silver. So we go back into the 13th century and we look, what we're looking at as far as price is concerned is silver in the like $400 to $600 range in 1998 dollars. Now let me stop there because I've used this chart quite often and given these numbers that are, very verifiable. But yet we're looking at $1998. So I went to the BLS, Bureau of Labor Statistics, and used their inflation calculator, which anyone that's known me or my work would say that's probably not a very truthful indicator of the real inflation rate, but we'll use the government's numbers. So if you type in $1,000 in 1998 prices, what is that in today's prices? And just rounding up slightly, it's 2,000. So every number on this chart for what silver's price is on this chart for today's equivalent, you'd have to double it. So if we're looking over here at the left end of the chart and looking around $300 silver, that would be $600 today. Just want to keep that in mind. So the all-time high of silver in 1998 was $806. So you hear this $600 silver price and all that, and people believe it or don't believe it. I don't know. I have my doubts. We'll get there. But what I want to point out is, in fact, it's really been there before. And of course, we're talking about the 15th century, but you really could double that and say $1,600 silver. So when you start thinking 50, 100, 150, it's not out of the realm of where silver has been in the past. Yes, it's a distance past. Yes, it doesn't have nearly as much weight in an algorithm as something that happened day after yesterday happened. But nonetheless, so as we progress over here, you see that it peaked out and it started coming down. And from roughly 1600 to the mid 1700s, the silver price was right around $200, which again, that would be 400 today's money. And then we saw after the mid 17th century, we saw it drop again to roughly $100. And that was from about 1800 to roughly 1900. Now I'm going to pause there for a moment. I'm going to come back over to the left side of the chart. And this is the GS ratio, the gold silver ratio, which we hear a great deal of talk about. And what I want to point out on this chart, and honestly, it didn't dawn on me for a while. It like smacked me in the face once I thought about it. But the gold silver ratio, here's 20. So it stayed below 20 from the 13th, 14th, 15th, 16th, 17th, and most of the 18th century. And the question is why? And the answer is obvious to me. I didn't think about it for a while, but it's because both gold and silver had one function and one function only, and that was money. When they both traded at money, silver had the lowest gold to silver ratio because silver basically was part of the monetary system. There was so much gold per silver, and it was fairly steady for century after century, as you can see. And then what happened in 1872 was the bankers of the United States, the Eastern Economic Establishment at the time, demonetized silver. It's called the crime of 73, I believe, 72, 73. And it was only gold could make settlement for final payment. And I want to pause there again for a few of the academics that are there to look up a couple of papers. One is called Gold Standard equals Fiat in Disguise. He makes a very strong argument for a monometallic standard really doesn't work that well because you only have one comparison, and that's to a paper equivalent. So what happens is the price comes down after demonetization. It spiked up during the Hunt brothers, and it came down to an adjusted all-price low, and that's what Buffett bought. Buffett was the best silver miner of all time. He didn't have anything to worry about other than a storage problem. Now, this is really my favorite chart. This comes from my friend Matt Watson, and this has been talked about by the others, but let me emphasize it. If you're looking at the red dotted line, what you're looking at is mined and recycled silver, which is roughly a 1 billion ounce market on an annual basis. And what Matt says is that we're flat going tapering down to the right to 2050. I would say we are doing that to 2030. I won't say 20 years beyond that, but you get the idea. I think that's a good assumption. If you want to look at the black line, that is just the mining industry. So mining plus recycling is a red line. That is the total silver on an annual basis. Now, what's interesting is the silver bars and the gray bars are investment demand. Here's where I differ with Matt. The reason I differ is because of the previous chart. As we go into the final phases of a global inflationary currency depreciation where the dollar isn't trusted, you're going to see that line be a lot greater than what he shows. He's showing a constant investment demand. I disagree. I think it's going to accelerate and accelerate wildly. If you go back to 2020 and you look what happened on the investment side, over 500 million ounces of investment demand took place that year. Why? I think primarily because of Guggenheim, who Scott Maynard talked to some of the people from Bloomberg that he thought silver was the best play in 2020. 320 million ounces of silver went into the ETFs during 2020. It's come back out, and you've actually seen physical silver leaving the ETFs on a rally like this where all the algorithms would be telling you to buy. Something isn't right in the silver market, but I've been here before. I think I've got a couple minutes left. So you could see from this point forward that there is not enough silver being mined and recycled to meet the demand, which means you're going to get a silver deficit that will continue, according to this chart, as far as the eye can see. And if you go out just 5 so years, you're looking at maybe 500 million ounces. I mean, you don't have to have a deficit of 500 million ounces to wipe out the above ground silver supply pretty quickly. And this has happened in the past. There was a deficit from 1990 to 2006 of 1.5 billion ounces of silver. The above ground silver supply went from 2 billion to 500 million at an annual rate on average, on aggregate of 100 million ounces per annum. Now we're looking, as Peter pointed out, at probably 250 to higher per annum going forward. That means with just industrial demand taking up basically the whole silver supply, any investment demand on top of it is going to add significantly to price pressure. I've got another 30 seconds. As Tavi has pointed out, if you've got $5 trillion looking on the sidelines and you take 1% of 5 trillion, you get 50 billion. If you look at 50 billion, that's 2 years supply of the silver market. If you don't think 1% of the money sitting there looking for a home of safety isn't going to flow into the silver market over the next few years, then I should probably quit. And I'm not quitting. I don't give up easily. So I will turn it over to the president of SilverCrest, Chris Ritchie, and he's got something, I think, in my opinion, one of the most important presentations during this session. Thank you.
One of the topics we'll be discussing today is is what to do with the gold and silver once you've mined it. So that's the stage of company we're at, where a lot of our peers are today. We're all at different stages, all have some very interesting things going on, all with very exciting projects. And we happen to be one of them. So, for us, we're going to spend a little bit of time about the asset, a little bit more about our strategy. Where we are today is we're very fortunate to be a very low cost producer. One of the things that sets us apart a little bit, we've already built our project. We've already paid back our debt. We've got close to 100 million on the balance sheet. And with that, we've included a little over 20 million of gold and silver bullion. So we've decided to hold gold and silver bullion on our balance sheet. So to talk about David's supply and demand numbers, to then include what is the additional demand if the mining industry or other industries start including to hold gold and silver, A, to give our investors more exposure, B, to hedge the inflation that we're exposed to. Gold and silver have utility, not just industrial, but on our balance sheet, they protect us from inflation. And we've decided to include these two important currencies on our own balance sheet to do just that. So this is something we'll spend some time on. And again, all of this starts from the fact that we've got an asset that gives us that choice, that gives us that flexibility. So we built this project during COVID. There was no inflation at that moment, so we were very fortunate to build it on time and on budget. We had about 90 million of debt at the end of construction. We paid all that back in 7 months. And a big challenge at that time was, what do we do with the cash? And the first response from our team was, well, we don't necessarily want the cash. We want the metal. At the time, silver was trading at sub $20 an ounce. We worked really hard to get these ounces, and we didn't like the price, and luckily we do have that flexibility to decide to hold on to that. So we'll talk a little bit about how that works. So today, again, as we discussed, we're sitting on about 91 million of cash and bullion. That was a couple months ago, so hopefully that number is a little higher. Including our debt availability, meaning our credit facility, we've got 160 million of value. So we're sitting here today with a market cap in the neighborhood of 1.2, 1.3 billion US. We're quite liquid. Our average liquidity has been about $13-14 million a day across the US market and the Canadian market. And with the short interest, we had a short interest for a little while, and we were told because our borrow was so cheap. I was a trader in a previous life, and it doesn't make a lot of sense to me, but there we are. An interesting chart here on the left showing the buildup of cash on our balance sheet. The chart on the right isn't meant to give anyone a hard time, but what it's meant to show is that it costs a lot of money to build a mine. And right now, we keep talking about we need higher silver prices, higher gold prices to incentivize new production. Who's going to spend that money? And we need to all be in a great position to pay for a new project, a new build, the exploration and the like. So I see this as wildly bullish in the space because right now I think it's cheaper to actually hold on to our metal than it is to start a project with a 20-year time horizon. I mean, our peers today that are very close to production, they've already found these projects are in a different category. But when you think of the next generation of projects 15, 20 years out, you have to think of 15 to 20 years of inflation and costs and compare the price of the metal today with the cost 20 years from now. So we believe that holding on to our metal today is potentially far cheaper than producing an asset 20 years from now. A little bit about our project. This year, our guidance is to sell between 9.8 and 10.2 million ounces of silver equivalent. We're about 50-50 silver gold. And just like John previously, 100% precious metals. Our AISC guidance is in the neighborhood of 15 to 15.90. In Q1, we were much lower. We did have some lower taxes and a lower spend, but we do think the full year guidance will be in that range. Do have a fair bit of money to spend on exploration. So we did get our project up and running within 7.5 years. Typical projects about double that. So now we get to use cash flow to look for more ounces as opposed to dilution. So we think that's something our shareholders get to benefit from. So the main crux of what we wanted to talk about was capital allocation flexibility. And again, when we built our project, we had some extra capital. We built it on time and on budget. We got up to a healthy amount of cash really quickly, and we wanted to figure out what best to do. So the first and foremost thing that we've decided to do is have a lot of balance sheet flexibility because we're a single asset producer. We have 2 contractors on site right now. We're probably going to ramp up their time at site to hurry up and build up our stockpile. So for people who don't know our name, everything we mine goes onto a stockpile, and then we choose the different high grade, medium grade, low grade portions of the stockpile to put into the plant so we can feed the plant a consistent grade to get the best recoveries possible. So that flexibility that we've created hopefully allows us to get the most out of every ton of rock. The second thing is we looked at future costs and what's happening in Mexico. We looked at mining over the years, and it has a roughly 8% increases in cost per year. Guess what? Gold's done a little better than that, right? So we hold gold to protect ourselves against our own inflation. But what we've also want to communicate is that all ounces we hold above the ground, our investors capture all of the upside. There's no more mining risk, inflation risk, or other risk associated with these ounces. So our investors get all of the upside of these ounces above ground. Supporting the valuation. Last year, we put out a technical report. It was about 3 years after the prior one. Guess what? Our costs were up. Our labor was up roughly 50%. Our stock got hit quite badly. We went out and bought a lot of stock. That was a big opportunity for us, and that was about half of the price of where we are today. So I bought stock, our company bought stock. So again, it's another way that we look at using our flexibility to add value for our shareholders. Growth and exploration, we have more veins on site. We have regional properties we're looking at. And again, we get to use cash now to go look for that. So why we hold, right? Why we hold the metal? We believe that we have a fiduciary obligation to protect the purchasing power of our balance sheet. And when you look at fiat currency relative to hard assets, we think our hard assets, our gold and silver, do a better job of protecting the purchasing power for our investors and for our future investments. So we're hoping that to have this conversation with more companies, not just in the mining space, that gold and silver have functional utility to protect our balance sheet. Again, leverage is what we've talked about. We get all of the upside if gold and silver goes up. We have ounces on our balance sheet that, we've held from about $20 silver. So for us, our investors get to participate in that. Improving our valuation. Now, when you look at a royalty or streaming company, they typically get a much better valuation in the market because they're able to give their investors more exposure to the metal, and they've made sure that the mining risk stays with the producers, and they get rewarded for that business model. So we view any ounces we hold on our balance sheet serve that same function. Our ounces above ground deserve more valuation than the dollar equivalent of a dollar, right? If we don't believe gold and silver is better than the dollar, we're in the wrong industry right now. Another thing that in a typical commodity business, if it's oil, coal, copper, big iron ore, you cannot store your product. You just logistically have to produce it and sell it, produce it and sell it. Well, the density of value in an ounce of gold and silver allows us to hold our product. So that means we do not have to be price takers. Getting to choose when we sell our product is a very big strategic advantage that the silver and gold mining industry has that's very unique. We saw in COVID what the value of a marginal barrel of oil was when all the storage was full. It was negative, right? So we have that choice. We have that power. So I want this conversation hopefully to be had on a broader basis to get everyone thinking along these lines ideally. How we hold it. So right now what we do is we sell all of our metal at the asset level, and we just buy it back as a currency. So we hold it, unallocated. And for us, it's just a balance sheet instrument. I'll leave it with this slide. Might not get to the next one. But when you look at the money growth, we've all talked about this in different ways and why we like gold and silver. when you look at the annual supply growth of the pound and the dollar, 9% a year, inflation's running at similar levels. When you look at the really not so healthy countries, their supply growth of the dollar is growing at 32% plus. And then you can see in China's money supply growth. So again, we want to give our investors more exposure to a product that has way less supply growth and we think is worth way more in the future. So I'll leave it with that, and hopefully this is something we talk about more in the future.
All right. Thank you very much, Chris. We haven't any questions come in. Well, we had one that's been asked a couple times. One is about this new election in Mexico. And I am friendly with some of the top tier mining types in Mexico. One individual in particular is named Andres Robles, and our colleagues and friends as well. I had him on about a year ago for our premium members, and we did a Q&A with him. I'm going to have him back probably tomorrow, maybe be pushed back to next week, to kind of go through what this election really means. But as David Wolfin said, you got to take into account that these are political statements and they're done for votes. They're not necessarily going to adhere to their promises. And even if she has the intent of maybe changing the mining industry in Mexico as it stands, that's a lot harder, easier said than done. There are so many things, as David pointed out, he's already there, and there's not much that they can do about mines that are already in place. Also with the NAFTA agreements and several other things. So again, I think it's more talk. I have not told my people to sell any shares in Mexico, but I said if they were worried, that certainly buying a put is cheap insurance. And Chris, would you like to comment further on that?
Mining is a really important business in Mexico. There's a significant amount of tax dollars and employment that comes from mining. I think, again, there's a big difference between, revenue the government's pulling in today versus long-term. But I mean, as you'll see from Tavi and some of his work, Mexico is the largest mining state. So even if there are some challenges or delays or just, a few more bumps in the road, if we think about what that does to supply and demand, it's still bullish to the price of silver. So any challenges across all governments and all nations just strengthens up the value of the metal itself. So we do know that the new government does not take power till October. So I would expect a long siesta for the summertime of activity and news flow from the government. But I do think there's more rhetoric here, just given their need for employment and income.
I want to admire publicly what you're doing at SilverCrest with storing metal above ground. Gold Corp had that same feature way back at the beginning of the bull market in the year 2000, and they kept that philosophy for a great time. And it was interesting for me to point out that Gold Corp had a better performance profile for over a decade than Berkshire Hathaway. And they had, mined gold and stored it for their investors. Really a good place for a lot of investors that want to be in the gold market but don't want to have it or store it or anything else. So there's many advantages. It's also a different tax rate when you own a mining company than when you own metal outright. I think I'll leave it there. It looks like we're out of time. I don't want to hog time. I'll give it back to the chair.
All right. Well, let's get started then. Got a few slides just to sort of present my case for hard assets, but specifically silver in this case. And I thought it was interesting, especially given today's ECB came out and cut interest rates. As we know, we're living in a world where central banks are clearly trapped, and it's remarkable to see all these quantitative tightening policies, from rate cuts and depletion of the reserves, and still, when you look at the money supply of most developed economies, they're still increasing despite the supposedly tightening policies already unfolding. And what the ECB did today, to me, it's remarkable because it reminds us how central banks are always having to reinstate this financial repression environment to alleviate the financial stress from having too much debt in the system. And this is how we as investors, capital allocators, need to, think about because that is ultimately what drives the value of things that have finite supply, but are also imperative for our economy to function, are going to become more and more relevant in the system. And when we think about capital allocation and how much money has flown into these asset classes, the commodities and commodity producers relative to other parts of the financial markets and markets overall, we've swung too far away from those things. They've been ignored and neglected for so long that I think capital is going to start migrating back into the space in a very long-term manner. If we see what's happening with China, how did gold become, the resurgence of gold, how did it all happen? It was gradually and now suddenly. And things are happening not just in China. It's a lot of the other Eastern societies have been accumulating gold and selling treasuries, and really just a transition in order to enhance the quality of their international reserves themselves. And this is, really was exacerbated after the Russian invasion in Ukraine. But these are things that we've been noticing for some time now, and I think they're only at the beginning. And how do we know if they're only in the beginning? I think this chart gives a good historical perspective of that. When I think about central banks accumulating the metal, I look back in history, and 1970s, basically the blue bars of this chart are showing gold as a percentage of international reserves by central banks. They used to own close to 75% of their international reserves in gold. Today, it's less than 20%. So the potential for things to grow over time and potentially even grow into numbers that we've seen back in the 1970s is highly likely, given the level of monetary dilution that is necessary in order to again alleviate the financial stress, given how much leverage is in the system. And then the white line is basically looking at central banks' holdings of treasuries, but not actually in a nominal terms, is looking at that relative to how much debt is outstanding. And this is the right way to look at, because if we think about how much holdings of central banks actually globally of U.S. treasuries is specifically, is actually at record levels. I'm not joking. I mean, ECB, the BOJ, they're still buying treasuries, believe it or not. Who is selling is most of the Eastern central banks, like I showed, the PBOC or the Russian central bank or others have certainly been on the other side of these types of procedures. But what we're seeing now is that the flood of issuances of sovereign debt by developed economies, because of this exponential growth of the debt issue, is causing their holdings relative to total outstanding amount of treasuries to actually be shrinking in a substantial way. And so this is what's causing here in a very meaningful chart. Now, central banks are not the only thing that is driving this demand for gold. There's another thing that will likely be the main driver for the metal as well, which is traditional portfolios, the 60-40 portfolios, and more even investors, individual investors that have also been neglecting the metal for a long time. And they have a different prioritization towards the metal. Their prioritization is towards owning a defensive asset, an asset that can actually behave well at moments when we are in a collapse of equity markets and other things. Treasuries have served that role very well in the prior decades. But interestingly, now we're seeing this resurgence of gold as the one defensive asset that actually is safer than U.S. Treasuries. And how do we see that? Well, I calculated this myself. I wanted to see if, with this recent decline in U.S. Treasuries, what is the downside volatility of owning treasuries versus downside volatility of owning gold? And guess what? For the first time in 45 years, gold is actually safer than treasuries. And so if you're a financial advisor, or if you're managing somebody else's money, a pension fund or retirement account, you're starting to think about gold as an allocation that actually is required to have in order to fix some issues with volatility in your own portfolio. So this is going to be a big change that we haven't seen yet. And finally, the infrastructure spending that we're seeing, the fiscal dominance that we're experiencing across most economies, that is likely to drive gold and other hard assets much higher: copper, silver, zinc, cobalt. and you can name it. All the commodities are going to be needed in this onshoring trends that we're seeing globally. And, if I just put this chart together not too long ago, just to put into perspective how much spending we're seeing of infrastructure today is more than what we saw coming out of the World War II. But the number that you're seeing of 544 billion, which is the second bar here, was actually globally, not just in the US. And this is all adjusted for inflation, or you can also look at that relative to GDP. And today, what we're seeing is 3 times the level of those amounts. So how do we see these levels of spending in construction without making the metals and mining industry at least more relevant to what it is today? And finally, my final point is you want to own something that is finite. We want to own something that has limited long-term supply. And silver, to me, it falls into that bucket like no other metal, really. And the main reason for that is because we know how difficult it is to find new discoveries of silver. And when we find them, it takes a long time for them to come into production. And so those are the main reasons why I actually think that this cycle for the metal is going to be much longer than what we've seen historically. And so to me, this is one of the best opportunities I've seen in my career, and why I've completely changed my focus towards this industry overall. Now, this is it for my presentation. I'm going to stop sharing my screen, but I think we're going to go into a panel here discussion in which I'm going to be moderating and asking some questions to our panelists. So how about we get our panelists on stage, and we can get started. How's it going, everybody?
Great.
But I wish I had a nickel every time I reference someone to go look at your work, Tavi.
Oh, no. It's a pleasure to be working with you all, because we all do works in the, not on camera, but we all do works together here to make this industry a better place. And I think that some of the questions that I have here are, fitting to this panel that we have, and I'm going to try to ask them accordingly, and hopefully all of you will have a chance to ask. I'll ask different questions to each person. So maybe let's get started with let's see here, Chen. I'm going to ask you an important question here. How do we increase as investors and as capital allocators or relevance as an industry overall?
Wow, that's a tough question. How do I increase the relevance? I mean, as an investor, I'm mostly seeking to catch the trend, right? Before everybody see that, as you guys did, which is excellent. You take over the 5th largest mine or silver mine in the world, and when there was nobody saw the value. So you want to be getting to that when nobody's looking at, and then profit from it. I mean, I think that's most important as an investor. I don't know if that's answered the question.
Absolutely, yes. Anybody else would like to chime in? I don't think we have a lot of time, but if anybody would like to chime in, we'll open the opportunity here for you.
Well, I would say real quickly, Tavi, that it's education. I mean, people do not understand inflation, what happens at the end of great inflations, and why the precious metals are so key. You never hear a Wall Streeter talk about it. I mean, I've only been on the main financial channels a couple of times. That was over a decade ago when silver couldn't be ignored. So I think it's education for investors to understand why it's so important. And I think your chart where you showed that there's less volatility in gold than there is in T-bills, that's something that everybody should pay attention to.
I would agree. So let's move forward. Maybe Peter, I'll ask you a question. Why do you think the long-term prices index of companies, the producers, are lower than the full cost to produce an ounce? And why do we still mine versus hold the metal, as sort of Ritchie was presenting? What are some of your views on that question?
Well, I mean, if I understood right, I guess my view is that the cost to produce have just risen so quickly, and the miners have had a harder time to keep up with that on balance. That those are big challenges, and if you look at what's been happening, and I think the last 3 months have been very telling. I've been saying for about 2 or 3 months, at least going back 3 months ago, I said that if you know, I had this sense that there was something that was kind of capping the market, the silver price in the market. If you had such ongoing structural deficits, so the past 3 years, another one expected for this year, and then if you add those up, you're looking at probably somewhere around 750 million ounces. So that's 3/4 of a year's supply. How come the silver price hasn't been moving? Well, the demand's been met somehow, and that was from these secondary or these above ground supplies. I think the market really has come to realize that that is finite. And to David's point, I've been saying the same thing, and we actually had a discussion about it a little while back. I think that it's unrealistic for us to look to the past and say, you know, when the silver price gets high enough, a lot of these, because there's a lot of above ground silver that we can't account for and can't estimate properly, but that silver will come back to market. And my view and my argument is that we are in a new kind of environment. You know, it's not for no reason that Costco is selling $2.5 billion worth of gold and silver every year. And then you have Walmart on top of it. These are places where the average person shops, and they're starting to see this. Talk about education. They're starting to see this happen. So the average, I think that the market's coming to terms with this, and I don't think that above ground silver held privately and in private hoards, whatever they may be, will come to market that quickly and that easily unless we're talking about much, much higher silver prices. So I think that's what's being sort of underestimated by the market. And I think that's where we can get the kind of scenario that Chen alluded to earlier, where you get these spikes, and those will come from investment demand.
Very well answered. Anybody else would like to chime in, or?
I just like to add one point. Historically, mostly silver mine is a byproduct. So basically, you copper mine and zinc mine, you mine silver, you just dump silver to the market. That's driven to the silver. As David Morgan pointed out correctly, silver has been down. Historically have been very high. And now those people, they're just byproduct. It's not that important. They just sell silver to the market, Now the table turn because the solar panel demand is so high. I just absorb all the actual silver, and then we are heading higher, just like Peter pointed out.
Well,
Tavi,
I'll just add quickly, just that we have exclusive control of all the mined silver. And we potentially have the choice as an industry to hold back, whether it's just 5 or 10%, like we tell retail investors to hold. But if we're financially strong enough at low prices or any prices, we start to hold back metal as ourselves instead of giving more exposure to fiat. You know, we just default sell our ounces as soon as we produce it. And, you know, that is a choice. So we talk about the deficits and we talk about the chance to go higher. We can contribute to that.
Tavi, can I throw in one last point?
Yes, go for it.
So it occurred to me when I was listening to Chris's presentation, something that I actually talked about in my book was how, you know, you have MicroStrategy, you have Tesla, for example, that changed their investment policy and allows them to buy not just Bitcoin, but gold, silver, ETFs, all sorts of things. You know, SilverCrest is becoming like the MicroStrategy of the mining industry. They're starting to, you know, a stockpile something that has a finite supply. And I think that, you know, I talk about in the book how it struck me in early 2021, I looked at the largest 5 tech companies. They had $500 billion of cash on their, if you added their cash on their balance sheets together. You know, we could realistically get to a point where shareholders are going to start to put pressure on companies and say, you cannot sit on this much cash. We are paying for the cost of inflation by having you sit on that cash. You have to find, it's on you to find something else that is more constructive to do with that money. You know, you're the ones managing it. You have, you know, the best sort of closest insight, but you can't keep doing that. Otherwise, we're gonna hold your feet to the fire. So I could see these kinds of things starting to come to market, and more as inflation stays high. Like you said, Tavi, we're back into a financial repression environment, and that's not going away.
Good stuff. All right, let me bring in some other folks that haven't shared their views yet. So, John, I'm going to go over to you real quick. If we believe in monetary metals as the ultimate form of protection for monetary dilution, why don't we use the metals themselves as we market them as in our balance sheets?
Yeah, so no, that's a great question, and I'd agree with David Morgan, his comment there that he made earlier. I think it's really a matter of promoting and educating, some investors there. I'd say for sure for silver investors, investors participating in webinars such as this, we all fully understand silver is being used in and is critical in the use of solar panels, electric vehicles, 5G infrastructure, all types of electronic applications. So we are absolutely, silver is being used in those applications without questions. But I'd say, yeah, the vast majority of generalist investors are just not at all aware of the importance that silver has and the potential impact that a sustained silver deficit could have on growth projections for, tech sectors, et cetera. And so, yeah, I think silver is being used in across a number of industries. Is obviously a critical metal. Is an exceptional store of value over 5,000 years history, et cetera. But the vast majority of retail investors, of even institutional generalist investors, are just not at all aware of this. And so I think, yeah, what we could do as companies is potentially form alliances here, helping sort of increase the general knowledge of the importance of our sector, and doing other things again, like holding back some silver, of course, makes logical sense, and that's obviously something that more producers certainly should be doing, just like SilverCrest is doing as well. And so, yeah, no, I think it's silver is being used in some very, very important industries. But I think the awareness is certainly not there.
Very well answered. Chris, I'm going to get back to you here since you were the one sort of that led this discussion of holding silver in the balance sheet. And now, what are some of the ways in which using our metals that we produce that can make our business better?
Yeah, we looked at some data, and one of the data we looked at 400 mines from 1990 to 2021, and we saw that costs went up roughly 8% a year. And I don't think that surprises anyone here. I mean, we talk about inflation all the time, and our labor, our inputs, our energy costs. I mean, these are all things we deal with every day. What we did notice was that gold had a correlation to our operating costs of 0.97. So that basically means gold itself is a tool to protect ourselves from inflation. So for us, what we're trying to get to here is to have enough gold on our balance sheet that's equivalent to our sustaining capital. So if we were to think about, building a new mine 20 years from now, and it was $500 million today, I think all of us here would assume that number's not 500 million 20 years from now. So how do we protect that purchasing power when our industry allocates large sums of capital over very long periods of time? So to me, it's using our own tool, our own instrument, our own product to protect ourselves. And again, this is why this isn't a conversation just about mining. This is about every single industry. To Peter's point, everybody has this obligation to protect the purchasing power of your balance sheet. And we're seeing central banks do it. They print money in as much as they possibly want, and they're choosing gold and silver. So we're the ones who have exclusive access to the product. We can choose what we do with it. So to me, that's a big one. The second one was when we think about the cost to replace an ounce, not just did we make money today? If we're selling an ounce today, can I allocate that money for 15, 20 years later and do better? And if I'm not quite sure, or the price is quite low, guess what? I get to hold it. And again, you can't hold coal or other types of commodities. So for us, it's a way to manage volatility. It's a way to manage inflation. And it's a way to give our shareholders more exposure.
Very well done. David Wolfin and Gary Thompson, I'm going to get back to you guys. I'm not forgetting about you both, but David Morgan, I have a question for you because I think this is more appropriate for you. Why holding metal gives us the ultimate amount of leverage?
There was a study done by Bullion Management in Canada, Nick Barishev, and he commissioned the Ibbotson and Associates to do a study on portfolio analysis. And what they discovered was that the optimum amount of exposure to physical metal, gold and silver, was 15% in all cases. So I brought that to the attention of a gentleman that was near the top of a certified financial planner group on a national basis. And again, it goes back to education. And I said, what happens if we have a big stock market crash and people all of a sudden realize that if they had gold in their portfolio, that it would mitigate some of the destruction of their portfolio? Would you be worried about not taking on the fiduciary responsibility that you do when you sign a contract with these people? And I was putting the heat on him. And he walked down the hall with me and he started to distance himself from me. And he just said, well, that's really not what we do, and just kind of walked away from me. If you look further, Jeff Christian from CPM Group did a similar analysis, but he did it from 1968 onward for the best portfolio risk to return ratio. Remember, I'm saying risk to return ratio. And that was a 25% holding, which is much bigger than I have ever said, Tavi. I mean, I've made these statements because they're facts, and maybe that is the right amount according to Jeff from 1968 on. That is the correct amount. But non-exposure, when you showed your chart, and I haven't seen one like that, I like to have it, but sorry, I digress, on what the holdings are from what they were back when I was a kid and how much they have been depleted and now they're building back, but they've got a long ways to build back. If you look at the silver market, it is 0.02% of the financial market. If you go back to 1900 and you didn't have silver in your pocket, you didn't have money anywhere in the world. Think about the extreme of that. In 1900, if you didn't have any silver in your pocket, you were dead broke. And yet today, silver represents 0.02%. So all we need is to see this education come to the fore and innovative thinking, such as Chris is proposing, that we actually help each other in this industry. And we can do it just by simple, subtle things. And all of a sudden, people will wake up and they'll probably hit it like a freight train at some point. And that's where you're probably going to get the explosive move that Chen and I are both talking about. One last thing, sorry, I could be a windbag, but after the big metals rush in 1980, we got to $50 silver. What people don't know is that for the next year, the average price of silver was $20, which means the all-time high in 1979 was $6, but a year later, the all-time average price was 300% greater. So if you go to the last run up in 2011 and it went to $50, it stayed at $30 for almost 2 years. Before that, the low was about 9. So 9 times 3 is 27. So that suggests to me that if we get a spike high of, let's say, $300 and it backs off, you could see it back off from where we started, which I'd say the breakout will be 30, multiply that by 3. So it could come back down and trade at $100 level for the next year or so after the spike high. So there's a lot to the silver market that, I am not Mr. Silver Guru. I kind of put my tongue in my cheek, but I have been around a few days. So I'll give it back to you, Tom. All
right. Well, I can't comment too much outside of saying that I probably need to speak with a financial advisor because I'm way too overweight.
We all.
But outside of that, let's go to David Wolfin. I have a question that is in my mind, actually. I'm sure you get that question a lot. Why do you think the mining industry is lagging so much the gold price? Is this a normal thing, or is this a different phenomenon, or do we need to see a change in the industry in order to see the catch up?
No, I think the rally's only happened over a few short months. So typically you need to see the majors gush with cash and start increasing their dividends and buying back shares, and that attracts the generalists, and that trickles down to the intermediates and then to us.
As simple as that, huh? It's coming. I believe in that too. I do think it's coming, and it's to David's point earlier. He said something regarding the size. I mean, I worked on a chart not too long ago, looking at the size of the overall industry, gold above ground and silver above ground, the size of the industry, and I mean, we've had periods when this industry was about 30% of the global market. And now it's, it's a margin error. So, certainly I can see just the asymmetry is what attracts me the most. Now I'm going to ask a tough question to Gary Thompson, my friend. I wish I knew the answer for this one as well. But I was looking at a chart of earnings growth of the S&P 500, and then I broke down to sectors, technology, industrials, and you can kind of see that they compound earnings very strongly over the years. Then I looked at the mining industry, and I saw basically a stagnant number right there. And I was like, well, maybe that's a function of metal prices. And you look at metal prices and they go up, but their earnings are not going up. So I have a question for you. How do we change this industry to finally start having it? Is it possible to change the profile of these businesses to compound growth and earnings moving forward as well?
Yeah, I mean, that's a great question. I think there's a lot to unpack, and I think it's part of the question you asked earlier about just interest in our sector, and the other question earlier on the relevance. I think the investors are too short-sighted. I mean, there are long-term investors, but not enough long-term investors. And as we all know on this panel, there's nothing quick about building a mine or finding one and making that happen. So I think part of that's education. I think we're starting to see a bit of a shift with the realization on where our minerals and metals come from on the critical mineral and the sort of supply chain side of things. So I think bringing that maybe more to people in education, that we need the support of the public to advance these critical minerals for our own uses and for society in general for the positive aspect. And maybe not so, I mean, it's hard to convert people that are short-term investors to longer term, but I think that's the mentality, is that we need mining as a civilization, and we need all these minerals and metals that we're producing or going to produce. And just, it's a bit of a mindset, I think, and that's a tough thing to do. It's not an easy thing, I think, but yeah, I think just the flows of capital are chasing quick returns. And that's where you're seeing the money go, and you can see that in the tech sector, with NVIDIA hitting $3 trillion. How does that even make any sense? To me, it doesn't. But that's what we're up against as a sector. So I think collectively, I think we hit a lot of good points here. Education, I think, yeah, holding some of our metal. I think those are great ideas. So it's, yeah, I open it up to anybody else that has any ideas on that. It's not an easy answer.
I know when we calculated our total cost, we took every penny we spent from buying the asset, all of our sunk capital. We included 8% inflation over the life of the mine, and we divided it by the number of reserves we have today. And our total cost was about $25. So for us, instead of the all-in sustaining cost, we looked at every penny spent. And to me, I think that's where, retained earnings is a tricky thing because of how intense that capital is and how hard it is to find a mine, which is so incredibly bullish for gold and silver, because we, in Tavi, a lot of your work, grades are coming down, CapEx is coming down, ESG pressures are getting worse. It's all amazing for supply growth. But, to me, when I look at capital allocation, I add all the dollars up. And to me, if this price of the silver is below that price point and you can hold it, I look at that level as, okay, don't sell it. And then the second question we ask then is, okay, if I do sell it and I do like my return, what's the cost to replace it? And, so for us, again, because we can hold our metal and you can't hold other commodities, we've just included that as a choice to say, hey, yeah, we, certain times in the cycle, let's just hold it. So for me, that's part of the return profile is, we're unfortunately in an industry that's really hard, and it means we're having to sell product to keep the lights on quite often and raise money all the time. And embracing those challenges and then embracing the value of the product once we get our hands on it.
And just to add to that,
Tavi?
I'd say that also is a great point. I mean, and it signifies the importance of new high-grade discoveries, because as Chris just mentioned, I mean, the main reason for earnings per share being flat in the mining industry, you start off with your higher grade mineralization, and then over time your grades decrease, mineralization gets deeper, gets more expensive to mine. And so, you absolutely need new discoveries coming on stream, coming into production, mining from new high grade zones in order to increase your profitability over time. And yeah, it's a very, very challenging industry. It's obviously tough to find high grade mineralization closer to surface. And so, we just need to spend more money, obviously, exploring, looking for high grade zones here. And that's, one of the ways to continue to increase profitability for more large mining companies is finding new ways of mining high grade mineralization, I'd say.
Yeah, I have a question for both of you, Chris and John. Chris, actually, you're one of the company that's in very good shape. You have all the cash on the balance sheet. Actually, I own the share when you were buying, so we are very happy shareholders. So in your position right now, you have all the cash, you have silver, you have gold. How does it compare to continue holding those versus a buying company like John's company, or build a mine with a junior? What would be the best capital allocation for you?
All the above. When the price is low, and if we prove to be a company that can be resilient at that moment, we hope that we would get a cost of capital advantage at the bottom of a cycle that allow us to either buy back shares, buy other assets, buy companies, hold our metal. So to me, it's the flexibility to what's the right decision at that right moment. Today, we're spending money on exploration and see if we can find more ounces on our own property, since we've already built the facility. We're looking in the region to find more assets that we can put on a truck and drive to our own plant. So those are, to us, things that are very obvious to try to do. Merge, buy, sell, merge. I mean, we're very open to that at this stage as well. At that stage, all we're trying to say is that this is just one other choice that should be on the list, right? And we want to make sure we can sort of do that at the right time. If prices are low, we want to we'd rather just hold on to the metal as opposed to selling it below our actual cost to produce it.
Okay, great, thank you. So when the price is high, does it more make sense to buy like John's company or Silver 47 or others?
Sure. I mean, that's what I'm saying. We look at that. We look at the ways to grow, and when we do that, we just make sure we include all the dollars that need to be spent to get that production above ground. And there's times where that's going to be a great opportunity, and to look at buying assets and buying companies that have done great work up until today. And there's other times where it's okay to hold metal instead. So yeah, all these are just additional choices in the same industry.
Chris, you don't get it. Chen is trying to get a merger.
I know.
No, I want to see from a
merger
investor
announcement in
perspective.
this panel.
Right.
So.
Yeah. I'm a great shareholder. I'm a happy shareholder of SilverCrest. Great. I'm happy shareholder of Avino, happy shareholder of Silver 41. I think AbraSilver has a great thesis out there. So I see what for the investor, average investor looking outside in, what do we go right now, right? We put the money equally, or where do I put my money? That's what I'm trying to get.
Yeah, no, that's
I'll let Tavi answer that one.
No, I mean it's tough. I mean, it's no, I personally, in terms of allocation of capital, we started really looking at things that were cheap in an exploration industry just because the number of geologists and the inefficiency level of assets being priced in markets was, clearly not in line with intrinsic value of a lot of the projects we were looking at. So we developed a strategy to tackle specifically exploration, but then deeper look in the industry and, deploying capital for a while now, we found that, there are, situations where companies are basically selling their assets because they're non-core or whatever reason, which was what happened with St. Cristobal, and we're able to step in and do a leverage buyout because nobody was interested in buying a company in an area. And the big hurdle was to understand, look, there are times when the market prioritizes different things. And in other words, jurisdiction may matter at some certain points of the cycle. And there are other times of the cycle where timing to put something into production matters even more than the actual risk of jurisdiction itself. Owning a project in the US may take you a very long time to get into production relative to other places in the world. And that's not a bad or good thing necessarily. It just means what part of the cycle are you in and how investors will prioritize those aspects of your business. And so I had to get that hurdle out of my mind because Bolivia is obviously not as attractive of a jurisdiction as other places. So I had to figure that out in my mind. Am I comfortable putting capital into that area? And the answer was yes at the end. But that was, but there are other opportunities like that, I think, now. And I think it's a fair question that Chen was asking regarding how to deploy capital in the space is really important. I'm focused in this development phase now because I do think that there's a lot of things to be done there as well. But let me ask one more final question. I guess somebody asked a question regarding Fortuna Silver. If anybody has any views on Fortuna Silver, I'm going to open that. I don't.
It's on our portfolio. I'll leave it there. I own it.
All right. Anybody else would like to make a comment or no?
Well, they just raised money and then share got hit very hard. I think it's could be a buying opportunity if you like the asset. But they put a lot of assets together in different continents. Sometimes, if there's a problem with the asset, there can be serious. But if the assets are fine, just because of the raise of money, it's a buying opportunity.
All right, Adrian is asking a question. We're almost out of time, so I'm going to ask the last question here. He's trying to get us in trouble, and so he's asking the question, does the Silver Institute do a good job, and does it do enough to promote silver? So who wants to answer that one?
Well, I had a lot of a discussion with Silver Institute, okay, and their issue is really the source they're using is called Metal Focus Group, which they are getting most of the money from the silver users. So I talked to the analysts for 2 years already. I mean, they are just not moving. They have their own very low ball estimate, and then they came out whatever number it is, they adjust it. Just like you saw a month ago, they put out a big press release. Oh, we are, last year's PV, it was above estimate. They didn't say their estimate was 28%, like Peter pointed out, and becomes 64%. And this year going to be another jump. So they are very behind the curve. I challenged them many times. I said, you guys should be ahead of the curve, not behind the curve. So far, it's not helping. So I will put it. I really encourage Silver Institute to be the leader in the silver industry and gave us accurate estimate. And I challenge them to do so.
Sounds just like the Federal Reserve.
And I don't think they do enough to promote silver. I spoke at the Institute very early in my career, and I was the only one that spoke about the monetary aspects and investment side. And after two appearances, I wasn't asked back. I have been friendly with Mike Lorenzo for a long time, and suggested a long time ago that they try to get the Silver Eagle program in the post office. Because, people come in and buy stamps. I bought some just because I like, muscle cars, and they had muscle cars. I'm not a stamp collector, but if I saw a little card on the window that says, hey, Silver Eagle's available, and I could buy, one off just for a Christmas present, a Thanksgiving present. But they don't really promote silver as a monetary/investment asset. That's my view, and I'm gonna keep it there. I'd like them to see they could do a lot more.
Well, no final thoughts, and then I'm going to finalize this panel. I appreciate everybody for participating, all the panelists, all the folks that were watching and asking questions. We appreciate the questions, and thanks everybody for watching this. It was great. Thanks everybody for participating. My first time moderating, so I hope I didn't do a terrible job, but here it is.
Good job. You did a great job, Tavi, as always.
All good.
All right, guys.
Thanks, everyone.